Hi, this is Zach here with a rather late edition of the Bulletin Board Heroes here at Zach'sTradersCafe.com for Tuesday, the 18th of July. Starting off with the FTSE 100, which is going nowhere fast at the moment. The late June support there, 74.01, we're just hanging above that. An end of day close back below 7,400, and there's the risk of a full or even partial retracement of the rebound that we had from the lowest levels this month, around the 72.30 level, but still waiting on this market to make up its mind. End of day close through that June resistance line around 74.50 could then take us up towards the 200-day line at 75.60, but I suppose that's about the best on the upside we're looking at the moment. Onto the DAX, which has been a safe haven for the bulls over much of the recent past, even though we had that dip earlier this month, just holding above the 50-day line around 15,900. We're still looking for a retest of 16,400, last month's resistance, over the rest of July. The basis for saying that is the way that both the 50 and 200-day moving averages are both rising, and the RSI is above neutral 50 at 53. If things do go pear-shaped, it will be down to the floor of that rising August trend channel, around 15,600 at the worst. We're not really seeing anything more bearish than that at the moment. Onto the Dow, where it's all about trying to hold this market trying to hold above the 34,000 level. So far we've done it quite well. It looks like a sort of mid-move consolidation, maybe even a bull flag breakout in the making through 34,600. If we can get through that particular level, then it's up to the March, at the top of that March rising trend channel, 35,100 maybe by the end of this month or even sooner. The market we're hoping will break out soon is Bitcoin, or at least some of us are. Here we've had this range between around 29,500 and 32,000. Want to see an end of day close through 31,000 really to trigger a potential fresh leg to the upside after all the consolidation that we've seen since basically the 20th of last month, nearly a month now in the wilderness, or at least trading sideways. On the downside, looking at around 28,600 on the 50-day line, maybe the worst case scenario at the moment, 25,800 at the 200-day line. But they're both rising, those 200-day lines, so 200-day those moving averages rather, and therefore we are biased to the upside, even though the RSI is now just flipped below the neutral 50 level. On the upside, a break of 31,000 and 35,000 or even 36,000 could be on the way by the end of next month. On to the stocks, and quite an extended selection today to make up for the fact that it's a bit late. Here we've got Carclo breaking above the 200-day line for the third time in the recent past. That's around 13 3/4. Above that, we're looking for a break towards 19 pence, which is the top of that rising trend channel from back in December. Punchy call to suggest that this is going to be the big break higher, but we have well-established support there at 12 pence, and just need to clear 15 to give us 19 over the near term. On to Cleantech Lithium, which had a boost from its JORC upgrade yesterday, but there may be even more of a boost from an article in the Investors Chronicle with Simon Thompson, who's permanently Journalist of the Year, apparently. On this situation, we're looking at, from a charting perspective, we're looking at the way that we had an unfilled gap to the upside yesterday, broke the high of yesterday, which was around 42 pence, and above that, looking for not only a retest of last month's resistance around 52 pence, but actually up to an April resistance line projection as high as 56 pence. Hopefully as soon as the end of this month. The RSI is pushed well above 50 now, has been above 50 since the middle of last month. But that unfilled gap to the upside, a strong signal, as regular Bulletin Board Hero viewers will be aware. This stage, only an end of day close back below 40 pence, really delaying the recovery argument. The stock which is finally got going now is Empire Metals. Two unfilled gaps to the upside so far this month. Maybe there could be another one pretty soon, but above 3.5 pence, looking for as high as 4.25 by the end of this month at a November resistance line projection, and not really expecting any price action back below the floor of the gap there around the 2.8 pence level. Stock which I missed out on, it's not really the type of stock we normally look at, but Gulf Marine Services, just worth taking a look here on the basis that it's always interesting to see how high this might fly. Beautiful rally over the recent past. Basically, the start of the rally in the recent past was breaking the 200-day moving average around 5.2 pence. Haven't really looked back since, and the best case scenario target may be over the next 2 to 4 weeks as high as 10 pence at the top of that rising trend channel from early 2021, and expecting the shares to remain well above 6 pence ahead of that move to 10 pence. One of the more obscure stocks on the bulletin board here today is GS Chain, and here we've got a rising trend channel base from November last year. Made a lot of progress today, breaking through the 200-day line. Haven't been above that since October, and heading towards 5 pence, hopefully rather easily by the end of this month. If you're a fan of the shares and looking for greater glory, then it would be up towards that resistance line from back in February, heading for 5 3/4, maybe over the next 2 to 4 weeks. So it looks like that one is on its way. Another stock which may be on its way is Mkango, and here we've got rising 50-day line there, trend line break that we had yesterday. Obviously a bit disappointing that we pulled back from the highs there around the 11.5 pence area, but at least while we're above that 50-day moving average around 10.5 pence, looking for 13 or 14 over the next 2 to 4 weeks or even sooner. Nuformix is the next contender, and here you can see that looks like shares are finally making ground above that broken March resistance line and the rising 50-day line at 0.25. Above that, we're looking for as high as 0.42 as soon as the end of next month. Obviously, the punchy call to say this is finally the time when the log jam will break, but it looks as though the shares have done the work, especially after that bear trap towards 0.2 pence. I interviewed Ondo yesterday, and it was obviously a very fulfilling experience. Here we've had this month so far an unfilled gap to the upside through the June resistance line there around 20 pence, and current situation is an end of day close above the June peak around 25 pence. Should be enough to take the shares up to as high as 35 pence over the next 2 to 4 weeks. That unfilled gap to the upside, a very strong signal, a very strong momentum signal, in fact, on Ondo. Next stock is Ocado, which I throw in just for a novelty's sake. Here we've been looking at this as a potential turnaround since the unfilled gap to the upside, bear trap gap reversal that we had last month, and initial target there around £5 or £6.20, above £6.20, looking for a February resistance line projection as high as £7.20, and that could happen as soon as the end of this month. So very strong turnaround there, and the bounce for the RSI above neutral 50 back in June, a very good signal there. On to another recovery situation, or would-be recovery situation, Pensana. Here we've had director buying and obviously institutional buying as well. Looks like the shares are getting slightly blocked on that late May resistance line there around 26 pence, but an end of day close above 26. Shares could be on their way to 34 or 35 pence as soon as the end of next month. One of the more weird charting setups at the moment is RC365. Very volatile all over the place, but at the moment we can still say that while there's no end of day close back below today's support at £1.20, we're looking for a resumption of the rally, which has been in place since last month, as high as £2.20 by the end of next month. If you want to allow a bit more wiggle room, then it would be 110 rather than 120 as the mid-close stop loss. Stock which hasn't appeared here for ages, and you'll see why from the chart, is Seraphim. Here we've got a U-shaped or a V-shaped bull flag after an unfilled gap to the upside. That's a pretty strong signal and suggests that as little as an end of day close above the 50-day line at 34 pence could take us up to 40 pence initially, maybe by the end of this month, and maybe as high as 47 pence by the end of next month. But the key here really is holding above 29 to 30 pence and that gap from last week. Stock which is surprised in terms of the relative lack of upside here has been sovereign metals with a deal with Rio Tinto. It doesn't really get better than that. The view here on a technical basis is that while we're above post-April resistance at 26 pence, we're looking at 35 or even 36 pence over the next 2 to 4 weeks. The company had an article in the Times as well, so let's see if that kicks in terms of giving validation to the latest RNS from the company. Down to the last two, and first is TAP Global, which seems to be stirring after a rather painful decline from 6 pence back in February. Here we've broken a falling wedge at around 2.2 pence. Above that, looking for an initial target here over the next 2 to 4 weeks at the 200-day moving average around 3.6 pence. So maybe by the end of this month, or the middle of August. And the upside valid while there is no end-of-day close back below that late April resistance line at 2.2 pence, especially after the RSI has gone so low, went into the sub 5 zone. Finishing off with URA, where things seem to be stirring in a positive way at the moment. Here we've bounced off the floor, or above both above the 200-day moving average and off the floor of that rising trend channel from November. It was a bullish sign back in April, and it's a bullish sign now. Got the 50-day line rising, so that suggests that we could hit 3 pence by the end of this month, and if we do that, looking for as high as 4 pence maybe by the middle of August. The other point to note there is the break of the RSI above the neutral 50 level, and of course we've also got June resistance line break through the 2.1 pence level, so URA looking rather better than it has in recent weeks. That's it from me today. More updates tomorrow.